Kowalczyk, he's a Chief Investment Strategist at CFC Seymour. Derek, tell us, what do you make of the levels at which we see dollar-yen today?
Well, it seems that the currency market is fully following the degree of risk aversion among global investors, and therefore the yen is strengthening because the carry trade is being unwound, while the higher yielding currencies, such as the Aussie in particular, but also the British pound, are declining in value as the carry trade again is being unwound. So whatever is happening in the currency market is just a pure reflection of the degree of fear among global investors, and it's really difficult to call the bottom under a market situation of heightened stress level. 110 seems to be a very strong psychological support. But again, anything is possible. However, in the sort of medium term, I believe that selling the yen against the dollar right now will make you rich by the end of the year.
So selling the yen against the dollar now, you're basically saying buy dollars versus yen, in other words, right?
Definitely, yes.
Could we, although if you're talking about risk being taken off the table, Derek, with investors looking at what's happening in the equity markets to decide on whether they want to continue taking this higher level of risk or not, are we in a situation where we're seeing unwinding of yen carry trades across the board?
Well, we definitely are, because when you look at the Commitment of Traders report from last week, it showed that the number of contracts on CME, the short yen contracts, has declined to 9,000 only, which is a very low level. It still shows us that the market is short yen a little bit, but most of the huge carry trade that has been accumulated in the course of the year has been unwound. And it is possible that we will actually go to the other side, meaning that the market will become long yen. But remember that such situations have occurred several times over the past 2 years, such as in August this year, in February this year, May, June last year, when there were these bouts of huge risk aversion accompanied by appreciation in the value of the yen, and yet everything was then returned to sort of normal. And my bet is that the same will happen right now, that within a few weeks the yen will be trading at much weaker levels. So dollar-yen will be much higher.
Derek, just a very quick question for me to wrap it up. You mentioned a moment ago that these FX markets really driven by fear at the moment. At what stage do you think that we'll see these markets driven more by the fundamentals again?
It will be at the point where equity investors will become confident about the size of credit-related losses among financial institutions globally. And obviously, it's really difficult to pinpoint the timing of that, because it depends on the level of disclosure by major investment banks and insurance companies. But I believe it will definitely happen in the course of this quarter.
Thanks very much. We've been talking to Derek Kowalczyk. He's Chief Investment Strategist at CFC Seymour. Coming up.